Welcome. We've got Jake Baker here from Peritus Finance taking us through another mortgage update for residential and buy-to-let. So, Jake, what's happening in the marketplace?
Hi, Ruth. Well, I think the big change at the moment is surrounding Rishi Sunak and the Chancellor's plans for the SDLT changes. The main question is, will the threshold be raised? That's going to prove to be quite contentious whether it happens or not. I think a lot of people will welcome it. The main question is whether the threshold will raise or whether we're going to have a SDLT holiday for 6 months to a year. It'll be interesting to see which of those options that he goes with. I think those are the two most likely at present, if I'm perfectly honest.
I think timing's crucial as well on this. He's got to do it tomorrow if he does it, not wait till October. That just seems ridiculous and scaremongering by the press, right?
Yeah, well, I would agree with you. Not 100% clear how it would work at this stage, but some commentators have pointed out that actually a mortgage guarantee backed by the government at higher loan to values, whether that's specifically for first-time buyers, would help stimulate the market as well in some places. The only concern, like anything with SDLT and changing that and stimulating demand, is actually that in property and in housing generally, fundamentally, we have a supply side issue and not a demand issue. There is demand there from buyers. Supporting buyers into the housing market is important, but also so is supply. It's something that we've touched on recently in terms of retail to resi and how planning could be changed potentially to help accommodate more development, and especially with the state of the high street at present, that will, I think, come to the fore in the coming weeks. I'm not a planning expert, so I'm not going to try and talk about that too much, if I'm honest. One thing that is great though is that general demand for mortgages is still really strong at the moment. I'm seeing a lot of first-time buyers. So anecdotally for me personally, I'm seeing a lot of first-time buyers still wanting to buy property, still looking to actively buy. The biggest problem they're having at the moment is finding the right property. So that kind of feeds back into what I was saying on the supply side. One thing that was quite interesting to see is a little piece of research done, and it said that despite coronavirus, 35% first-time buyers said that they are still planning to buy this year, and COVID has not affected their plans at all. 51% said that they are still planning to buy this year, but COVID had affected their plans, i.e. they might be looking at a slightly smaller property. It might have changed in terms of outside space, what they were looking for, which I think was, again, something that we touched on last time we spoke, Ruth, is how it would change the demands of buyers and what they wanted.
What the valuations coming in at?
Generally quite good. I haven't seen any major down valuations yet on any of my deals. I have heard anecdotally from other people in the market that they've had issues on some cases. I think it really depends on what your property is and where it is, and the history in that area. If we're talking about typically low demand areas, then I can imagine down valuations are going to happen. I think if we're talking about areas which aren't going to be materially affected by COVID, we're going back to that material, that clause that a lot of valuers were inserting into the reports, then that can be an issue. But me personally, no, I haven't seen anything horrific like that yet, and touch wood, going forward, I won't either for my clients. But I think there's certainly value in having a conversation with valuers pre-valuation, if possible, just to try and get a steer. Whether it's speaking to a friend who works in the industry, whether it's picking the phone up and just saying, look, this is what I've got. Valuers are, I know sometimes we're removed from them. We don't see them face to face often, and we don't get a lot of interaction with them. They are still human. They will engage with us. I think that's really important, just to pick the phone up and have a chat with someone. You can save a lot of money and headache in the long run.
I know a lot of our property sisters are actively going on all valuations with their valuation packs in hand to discuss valuations with valuers on site. So there's no kind of scary comeback afterwards. So that's definitely something everyone can do. So it's a good idea though to maybe try and get hold of them beforehand as well.
Absolutely. I think there's a lot of value in picking someone's brains and having a chat with them. And often people will tell you if they think you're way off the mark, they'll probably give you a quick steer. If you're a couple of $100,000 out, if you're 5 or 10 grand out, then they might say, look, that's going to come up when I do the research. But ultimately, they don't necessarily know off the top of their head instantly. But definitely worth having a chat, Ruth. I think that's really important.
Yeah.
One thing I am noticing on the buy-to-let side is that loan values are starting to get stronger again. Less so on the resi side, because 90% is still the battleground that it was before, with only a couple of lenders lending in that space, some entrance to the market, some exits from the market in that sense. But day to day, that is still changing. On the buy-to-let side, we're seeing lenders moving back towards 70-75% on portfolios and on buy-to-lets generally, which is great. We've got a few going through 75% where we're capital raising for clients at present, which is fantastic. So it's really good to see lenders getting back up to that better loan to value from my perspective.
Yeah, that's fantastic.
Yeah, it really is. I mean, it's really needed, because that's that development in the market which is going to provide the stock for those first-time buyers. That has to start now. Otherwise, we're going to have this period in 6 or 12 months' time where there's going to be not a great deal hitting the market, and it's going to cause issues. What is interesting to see was that Halifax produced a report today which suggested that house prices had dipped for the 4th month in a row. From last month, they were down 0.1%. But if we look at that in the wider context of the world, on the same point last year, house prices are actually up 2.5%. So that's actually quite a positive. And the doom and gloom of coronavirus is going to destroy the property market, et cetera, it's just not true.
A question for you. You know the house price index, is that 3 months behind anyway?
I think it is, yeah. But I think what's interesting though is seeing the demand where we're at now. So even if the index is 3 months behind, that still takes us to the start of, that would have the first month of COVID's figures in there, where activity had already slowed pretty much to a stop. So even saying that, I don't think we're going to see a material drop. I think what will have happened is that we'll see pockets of drops in sort of prime or super prime areas. Certainly in London, for example, I mean, primes took a battering over the last couple of years. I think that has now potentially bottomed out. Super prime, sort of that bottomed out probably before prime did. Now, I think there's other prime areas in regional cities that may take a bit of a hit, but actually your sort of first-time buyer properties, your sort of up to £500,000, I think in regional areas will probably be fairly safe and will continue to appreciate and value over the next few years.
Yeah, and I think definitely the stimulus from stamp duty cuts and VAT cuts will definitely will definitely speed the market up again, I think. Absolutely.
And I think what's interesting is that clearly the SDLT cuts are going to come in on the first-time buyer side or on the resi side only, and it's not necessarily going to be put in place for buy-to-let landlords and for portfolio landlords, which rightly or wrongly means that those charges will still be in place. So I know a lot of the property sisters will still be affected by those SDLT charges, Ruth, but ultimately for the first-time buyer side of the market, it's probably for the best. Maybe not what everyone wants to hear.
Massively affects. It's funny though, because it massively affects our market as well, because people buy our properties. We're often in chain as a buy-to-let with a SDL, with a we're in chains, so it's it will affect our market. And when stamp duty goes for say under 500k, it means that the properties we're looking at to purchase suddenly become a little bit more affordable. They could become more affordable for the first-time buyers. But I think, so it's all going to affect our market, no matter whether it's directly relevant to us or not. But it's really interesting.
Definitely. Yeah, certainly. No, I agree.
Yeah.
One of the final points I'll touch on as well is that just this week we've seen that bridging seems to be getting a little bit easier again, or not necessarily easier. I think loan to values will seem to be relaxed slightly. So where things were kind of capped at 50 and 60% with some lenders, I know some were still lending at 70, 75. But I'm seeing more entrance back into the higher loan to value market on the bridging side again, which is a further sign of confidence in the market moving forwards. So again, all these factors together make me feel that we're not looking at the next big recession like we've had before. I'm not saying that we're going to have the best property market in the world after all this is said and done. But I don't think the impact is going to be quite as large and quite as damaging as possibly first thought on the property market.
I mean, the papers are definitely making a meal out of it, which I think is you know, is what they do, right? So yeah, but that's brilliant, Jake. That's all we've got time for today. We're out of our 10 minutes. I just want to thank you so much, and I'll see you again in 2 weeks. If you want to get hold of Jake, you can catch him in the details below. Thanks a lot, Jake. Bye.
Thanks, Ruth. See you soon. Bye.